Hello and welcome to Banking Innovation Summit. My name is Mark Johnston and I'm your host for the next 45 minutes. Now this next session is all around BaaS or BaaP, new financial models for a digital finance landscape. Now in a moment I'm going to introduce our excellent panel speakers. But first of all, a note for you, our audience at home. We want to hear your thoughts, we want to hear your opinions and we want to get your questions. Pop them in the chat and we'll bring them into the discussion as we progress and put them in front of these great speakers. Okay, fantastic. Now, let me introduce our speakers for today. We've got Ahsan Jamal of Samba Bank. Welcome to the discussion, Ahsan. Can I get 30 seconds from who you are, please?
Well, thank you so much, Mark, for this opportunity. And I'm really excited to be here and share my thoughts. I am currently head of digital strategy and transformation at Samba Bank, Pakistan, where I am responsible for end-to-end digitization of the bank. And something I prefer to call as that I'm building bank of the future.
Great, thank you very much for that, Ahsan. And welcome back to Jason Maude, one of our regular featured guests. Welcome, Jason. Quick note to our audience on who you are, please.
Yes, thank you very much. My name is Jason Maude and I am the Chief Technology Advocate of Starling Bank. So Starling Bank is a bank based in the UK, wholly digital, wholly online, no physical presence at all. And my job is to go around and talk about the technology and the technology culture and practices behind Starling Bank because we operate our technology very differently to a traditional bank. So I go around and talk about that and how we do things.
Great, thank you, Jason. You do that really well. And the next person we've got to introduce to our panel, new to our panel, is Layla Qassim of SolarisBank. Welcome, Layla. A little bit of an intro to you, please.
Thanks so much for having me, Mark. My name is Layla. I'm the head of strategy and shareholder relations at SolarisBank. SolarisBank is a Berlin headquartered banking as a service provider. We firmly believe that we are the European leader in this space. So it's a real pleasure to be here talking about my favorite topic.
Excellent. Welcome, Layla. And finally, last but by no means least, we've got Nick Ogden of ClearBank. Nick, welcome to the discussion. Bit of an intro on you, please.
Hey, yeah, listen, thank you. And thanks for asking me to join this. My background really is I've been, a fintech entrepreneur for a number of years. I founded WorldPay, Cashflows, ClearBank and RTGS.Global. And today I'm a board advisor to ClearBank and obviously a shareholder and a director on the RTGS group and working with a number of other interesting fintech startups.
Excellent. Thank you very much, Nick. So we've got some great experience. Do get your questions in for our panelists and we'll bring them in and put them in front of them. Okay, so first question we have today. Definitions. What is banking as a platform and how does it differ from banking as a service? And Layla, I'm going to come straight to you with that one, please.
Fabulous, Mark. So banking as a service, and I'd really welcome the other panelists' views on this. The way that we see it is any kind of banking process which is entirely tech-enabled through an API-driven solution sitting on top of a regulated license. So either a banking license or an e-money license, for example. You have lots of those in the UK. And essentially you have the banking tech stack that sits on top of that. So that's how I would view banking as a service. That's something that we do at SolarisBank because we have our German banking license and then do all of the banking tech stack on top of that. For me, banking as a platform is basically when you strip out the license underneath that and it's purely the banking processes. So it's still as a service, it's still tech-enabled, it's still API-driven, but it's much more sort of software as a service like you strip out the license and it's just the platform. That would be the way that I would view it.
Great. Thank you very much for that, Layla. Ahsan, do you agree with that or have you slightly different definitions at all?
Well, I agree with her, but that's the beauty of definition that you can have more than one. And if I give my personal view on definition of BaaS, I see it as a beautiful collaboration between banking infrastructure and non-banking players. And it allows provision of providing banking services to a non-banking distributor. And I mean, I prefer to call it as embedded banking, which is different from banking as a platform where banks incorporate services of fintech into their platform or open API, which is just extension of open banking, which is extension of banking services via API. And I truly believe that banking as a service is changing that shape of banking value chain.
Great, thank you very much for that, Ahsan. Let's bring you back in then, Nick. Your thoughts on that one then, please?
Yeah, I actually think both of these definitions are very, very similar, but the output of both of them is the same. And what they're doing is creating a competitive marketplace and allowing a wider range of organizations to innovate without having to go through the complexity of getting a banking license. You know, it took us 2.5 years to get our banking license at ClearBank to enable banking as a service to other regulated businesses. And I think that what we do is then offer change and challenge in a marketplace and create competition to allow, as I say, wider consumer and business choice.
Thank you very much for that, Nick. Layla, did you want to add something else to what you heard there at all?
More the fact that I don't think the definition that I provided at the beginning is contrary to either what Ahsan or Nick said. It's entirely to enable, I think, in the background as an infrastructure player, things like embedded finance, or as it's also known, contextual finance. So more it's shades of the spectrum, but I think we're all saying the same thing.
Excellent, thanks, Layla. And Jason, any thoughts on what you've heard from your colleagues at all there?
Yeah, I think that there are a whole bunch of good definitions which aren't necessarily contradictory at all. How I see it is that banking as a service is the offering via APIs, other technology solutions of an individual aspect of a bank, such as the ability to transfer payments of one type or another, the offering of cards of various types and provisioning of cards and so on. And banking as a platform is all those services at once offered as a whole package. So that for me is the distinction between the two, where a bank white labeling of a bank from one particular organization that is fronted by another organization, for example.
Great, thank you very much for that, Jason. Great start to the discussion. If you've got any questions, do pop them in the chat. We've got one already. Layla, if I come to you with this one first of all, if I can, please. Why aren't incumbents offering banking as a service? The only example that Leo can think of is of BBVA, who it did in its own market. Layla, any thoughts on that one at all, please?
Yes, BBVA were indeed one of the pioneers, and in full disclosure, they're one of our shareholders. And I think that the reason why they're one of our shareholders is because they wanted to understand and realize how we're doing it here in Europe. I think that the incumbents, quite frankly, they're dealing with aging infrastructure and legacy mainframe technology. I'd love to hear Jason's thought about this, given that you're a technology advocate at Starling. The reality is that these incumbents, unfortunately, will not have the ability to move as quickly as banking as a service providers, because oftentimes you're dealing with much younger tech stack that is usually very agile, able to adapt quickly to change in the market and respond to the needs of the market. With old mainframes that are incredibly powerful, have a great deal of computing power and processing ability, they don't have that ability and agility to respond to the market. So that's the reason why I think you're seeing much more younger, nimble fintechs doing that, as opposed to older school incumbents, I would say.
Great, thank you very much for that, Layla. Let's come to, in a moment we'll come to you, Nick, but Jason, let's come to you first of all. Your thoughts on that one?
Yeah, no, I absolutely agree with Layla. This is very much a question of how the incumbent banks are structured. Generally speaking, their software architecture landscape is very fragmented. There isn't forget about connections from them to the outside world. They don't even have from one of their systems to another of their systems. So first and foremost, they have to get their own house in order and make sure that all of their systems within the bank are connected up via well-maintained APIs, that the source of a particular piece of data is well defined, so that you know exactly what the main owner of, say, account data is or payment data is. And once you've done that, then you can start thinking about offering up these connections to the outside world. Because unless you have that defined in a very nice modular way, which is, you know, where all the modules are connected together, you'll end up essentially, if you try and offer banking as a service, building those connections that you have to faster payments network. If you were here in the UK, twice, right? You'll build one consumer offering and then once for your banking as a service offering, because you can't have a thing where you have that connection and that connection can connect out to both a consumer and a banking as a service set of APIs. Whereas Starling Bank does have that, so we can offer that sort of facility. So there's definitely internal connections that need to be made in order to solve that problem for the incumbents.
Thank you very much for that, Jason. Nick, let's come to you. Your thoughts, please.
Well, I think it's interesting. HSBC obviously saw the questions when you were putting them together, because they launched 2 days ago the fact that they're going to be doing bank as a service in the UK. And so, you know, there's the old saying, isn't there, that the pioneers get the arrows and the settlers get the land. So it'll be interesting to see how all of that lot shakes out. But if you then look through that press release and see what they're trying to do, I think Starling and Solaris and certainly ClearBank, you know, built cloud-centric IT platforms that are scalable, don't have inbuilt legacy, and can allow us to adapt and develop APIs very, very quickly. And interestingly, the team at HSBC have gone with Oracle NetSuite. And so it's going to be very interesting to see whether, you know, they can develop the same sort of flexibility and speed that you need to have in a modern tech stack to satisfy your customers. But it's good to see them entering the marketplace and see how it goes.
Great, thank you very much for that, Nick. And Ahsan, I think you had something to add as well, please.
Yeah, so I just want to add a little bit perspective from this side of the world, in developing world. So, I mean, we are seeing model in our country that may not necessarily be labeled as BaaS, but when you look closely, they are actually based on those same principles. So the point is that there could be an outcome of product or services that may not cover that regulatory framework, but creative use cases over here. So, for example, we have seen telcos offering nano credit to their customers, and they are consuming banking infrastructure without labeling the bank. Or we have seen certain great cases in form of merchant payments. So, I think on this side of the world, there are more creative solutions coming up, not necessarily called as BaaS, but based on similar principles.
Great, thank you very much for that, Ahsan. The next question we've got on our agenda here, we'll come back to a couple more of those questions in the chat in a second, is, which I think we've probably gone some way to answering it already, is banking as a service a threat to traditional banks or an opportunity? And who is currently driving innovation in this space? Jason, do you want to kick us off with that one, please?
Sure, yeah. Yes, it is a threat, and yes, it is an opportunity. Most technological changes are both, right? So the point about banking as a service, banking as a platform, is that this sort of paradigm will become more and more necessary for banks to be able to claim to be banks. If you had which said we're a bank, but we don't offer debit cards and you can't withdraw money from ATMs, right? As a consumer bank, that doesn't really work. At least it doesn't in the UK, right? That wouldn't be a viable proposition. You need to be able to offer a debit card at the very least in order to be considered a bank in the UK, a consumer bank at least. And I think that BaaS will rapidly become that, right? Is the ability to easily connect your systems out to other systems and offer up services will very rapidly become something that is necessary for a bank to operate, because there'll be loads of clever fintech players out there who are developing specific apps in the realms of savings or insurance or pensions or other things like that, which will want to connect to a bank via an API and and access them. And that might be, this is more general point about APIs in general, But I think that, BaaS definitely falls into this, that you'll need to be offering something like that, because consumers will start going, well, if you're not offering this, then like, why would I use you? In the same way that a consumer wouldn't use something that didn't offer you a debit card. So I think that this is, there is an opportunity here for incumbent banks to, run in and use their vast resources and the vast trust that consumers have in them to come in and really develop something that is API centric and that really provides services to the outside world. But if they don't do that, then they're going to be left like a town which the railroad passed by, right? They're going to be left not connected to the network, and people will just stop using them and they will gradually wither. And it might take quite a long time because there is a lot of inertia in the industry, but they will wither and die eventually.
Thank you very much for that, Jason. Layla, your thoughts on that one, please?
I mean, I don't think I could have put it better the way Jason put it. It really is a double-edged sword, and it will be a case of if the incumbents choose to adopt and incorporate and collaborate, then I think it could be a real opportunity. Otherwise, I love this highway analogy because it's such a good one. If there is too much inertia internally and they can't align and get their ducks in a row, then unfortunately they will be left in the wake of the BaaS players you have around this table, not only, but most of the BaaS space.
Great, thank you very much for that, Layla. Nick, you're in agreement? Your thoughts?
Yeah, I am in agreement. I think there's another very, very important fact, though, which has, I think, been highlighted perhaps as well during the pandemic, and that is that our industry, the financial services industry, is totally inefficient. We create around $15 trillion a year of financial friction costs. And that's the delays that we put on all of our customers in relation to payments being settled, money being available, access to funds, unable to access operators to discuss mortgages and loans through weekends and all the rest of it. And that has to change because as a result of the pandemic, everybody has gone through a digital immersion and understands how quickly things can now work, because we all do video conference and video calls, exactly the same way as we're on this conference. And we're getting used to immediacy, which doesn't exist. Now, the clever organizations are going to be using BaaS services to develop, as I was saying earlier, really customer-centric services that get rid of that friction and deliver value. Because, if you go online and you went on to, say, do a Google or a Bing search today, and it came back and said, look, it's great, but you're going to have to wait 3 days for a result, you'd be particularly unhappy. And that's what happens often with international payments, as an example.
Great, thanks very much for that, Nick. That's really good comments there. And Ahsan, do you have anything else to add to what you heard from your fellow panelists as well, please?
Yeah, in addition to agreeing with my panelist, I think one important point is that I believe that innovation in this space would not be driven by fintechs or the digital banks because they have that inherited mindset of competing with the banks. I think it would be led by non-financial tech companies, those having some specific and captive use case, and they plan to integrate payments or banking service as last mile of their end-to-end user journey to provide a better frictionless experience. And in terms of, I think, threat and opportunity, yes, it's a threat for larger banks because they don't understand this concept and they have kind of mindset of that we can do it all, and they may end up being disconnected from customer value chain. Whereas I think lean and smaller banks do understand this concept and they do understand that by partnering with these non-financial services service provider, they will have better and far reach and eventually have impact on their bottom line.
Great, thank you very much for that, Ahsan. I think if we turn to the chat now, there's quite a few questions coming through there, so I'm just going to go through some of those now for our audience. So first one, Layla, if I could send this your way if I can. It's from Jiao. Their question is, can BaaS accommodate multi-countries with a multitude of needs and rules of law compliance? Your thoughts on that one?
Really great question. It can. certainly in the European Economic Area. So, for example, we have now successfully branched to France, Italy, and Spain. And the difference between using our German banking license and passporting it to different European countries, we have branched to France, Italy, and Spain. And what that means is that you can offer a local IBAN. And for people who don't know what that stands for, it's International Bank Account Number. And what that does, following on actually quite nicely from Ahsan's point, is it enables those local players in those local markets to utilize our banking as a service offering, having the local flavor, if you will, because sometimes even though the EU is technically one single euro market, there are lots of local market dysfunction. So you have to make sure that to issue an IBAN, you have to have a local presence on the ground in those countries. You have to have somebody who is interfacing with the regulator, understands the culture, understands the language, has the ability to move things along if there might be some friction along the way, because you have to create these human connections as well in order to enable that digital fast track. So certainly in the European area, yes, absolutely. In terms of whether you take that further afield, there are quite a few players that are looking to partner with local regulated institutions. So you can, this is why I differentiated at the beginning between banking as a service and banking as a platform, because we would strip out the license when we're talking about banking as a platform, and then you could use that tech stack theoretically anywhere in the world. And as long as you partner with local regulated institutions, you adapt some of the tech components to those local infrastructures, connecting to those local payment rails, then theoretically you could.
Great, thank you very much for that, Layla. Jao, I hope that answered your question really well. I think it was really good. So the next question we've got here from Seema, if I can give this to you, Jason, perhaps. Seema said, in what ways are banks encouraging people to use banking as a platform?
So I think that a lot of this, so we often concentrate on how individuals will be using banking as a service or banking as a platform or things like that. And I don't actually think that individuals will be doing that, or individual people will be doing that. I think that what will be happening is companies, small and medium enterprises, new fintechs, new players will be using the banking as a service platform, banking as a service or banking as a platform developed by large banks, and using that in the same way that when a consumer goes into a supermarket and uses their to buy something, they don't think about all the underlying infrastructure of the card network, and how it connects to the bank, right? They don't need to know that. They just need to know that they can do this with their card. And so I think the same thing will happen. There'll be, a great service that they know will connect to their bank somehow. They'll understand that, but they won't understand exactly how the underlying infrastructure works or exactly how the platforming or servicing works. And they won't need to, as long as it works well, and as long as they have, they understand who they can go to if something goes wrong. They don't need to understand all of the underlying infrastructure of it.
Great, thank you very much for that, Jason. Nick, let's come to you on that one as well, please, then.
Yeah, I think what the consumers will be seeing and using is the output of this, which is called open banking or open finance. And I think that's how they will consume it and use these services. And that's where it gets really interesting, because the users of bank as a service or bank as a platform can develop some real innovative solutions into that marketplace. And that's how the consumers will benefit from this market change.
Thank you for that, Nick. And there's another question here, actually, that I want to direct to you, straight back to you, Nick, if I can, from Angel, who said, do you foresee consolidation among banking as a service or banking as a platform players to gain both scale and geographical scope in any time soon?
I don't think that's going to happen in the near term. I think there's some very interesting market opportunities where collaboration could get deeper, but I can't see it merging up because most of these new challenger banks are still embryonic, still moving towards profitability and all the rest of it. So I can't see that happening. The other thing that could happen is that you could see some large international banks who are a step out or a step behind the time, coming into different jurisdictions, the UK and into Europe, and trying to acquire some of the challenger banks to pick up the tech and pick up the market work they've already done for less money now than they'd have to pay in a year or so's time.
Great, thank you for that insight, Nick. And a question for you, Ahsan. Let's try this one. We've got Evo has said an API is a software product, not a banking product. Selling software products requires different business skills. How do you see this?
So API is a software product, but it is something that enables business product. And the widely used application in banking is open banking, where a bank is implementing a software to extend its existing services to non-banking entities. Now, technology is just a one part, and I would say just a small part because there are a lot of other considerations as well. So, for example, is extending the product to external world, does it make sense? Will it create some profitability or will it give some benefit to the bank? And then above all, the compliance and operational aspects and how those processes would be changed based on outcome of that implementation. So I think those components and those parts are also very important in addition to technology.
Great, thank you very much for that, Ahsan. Another question here. Layla, let's bring this over to you if we can from Benny. Benny has said, will banking as a service mean that basically every company will be a fintech? Is that a good thing?
I think he's alluding there to Andreessen Horowitz's claim a few years back that because every company will embed some sort of financial service in their offering, then they are thereby a fintech. There's quite a few different opinions on it. It's a little bit of a, I would say. The ability to offer financial services doesn't necessarily therefore mean that you are a fintech. What it does mean, though, is that you have embedded some financial services in your look and feel and touch in your offering that makes sense for you. I do think that there is a world in the future where the majority of people's financial services will be consumed within the, let's say, ecosystem or brands that they're very well aware of and comfortable with and have a great degree of brand loyalty to. And it might not necessarily be your incumbents, like your HSBCs, your Barclays, what have you. I think that you'll find that a lot of financial service consumption will shift away from the typical banks and instead be in the embedded finance construct.
Thank you, Layla. Ahsan, we'll come to you in a second. Jason, anything to add to what you heard from Layla there?
Yeah, absolutely. I completely agree. Just to add, I think that the idea that in the future a bank wouldn't be offering banking as a service is like walking into a bank today and them saying we don't use computers, right? It'll become the same thing. I've always thought that the fintech label is a bit nebulous, right? What exactly does it mean? It just means, to me at least, it just means that the financial firm is using more modern techniques than the incumbents currently are. And I think everyone will gradually move on to those, which include things like offering services via APIs and so on.
Thank you, Jason. Ahsan, your point to make on that one as well, please.
Yeah, so I don't think that banking as a service would be creating a lot of fintechs. And as I mentioned earlier, I think it would fit into a greater and a bigger use case or experience of the customer. So, for example, it would fit into car booking service or services like Airbnb or maybe online grocery delivery services. So I don't think, and I don't think bank would be comfortable creating a parallel competition by allowing some fintech to leverage on their infrastructure, but they will be more comfortable in extending banking as service to non-financial players.
Thank you, Ahsan. And a final question we've got in the chat here before we move on is, Jason, maybe we come to you with this one. It's from Seema. It says, how do you face a situation when a customer is using a different app, i.e. TransferWise, to complete a transfer?
You try and provide a better service. than TransferWise are doing. A simple answer, right? This like the this is good for competition and good for the consumer in general, in the sense that it is increasing the number of options available, and it forces companies to innovate and try and provide better services than they are currently providing. So if someone goes elsewhere and wants to use TransferWise for foreign transfers because TransferWise are providing a better service or lower fees or more reliable service or quicker service, you have to examine that and work out how you can compete and if you can compete and if you want to compete.
Great, thank you. Great answer, Jason. So let's move on with the agenda that we've got here. So the next question we've got is, have some financial institutions been slow to capitalise on this new opportunity? Nick, should we come to you with that one?
I think yes, they have. I mean, if the commercial internet arrived back in 1995, and we were running NatWest.com, I think, in 1997. And all of the opportunities to develop and move and build new applications and new services have existed for years and years and years, and nobody went and did it. They just felt that the dominant position they had, they weren't going to get challenged. And it was really only as a result of the Payment Service Directive initiatives that the EU came out with in 2006 and 2007, which unfortunately were slap bang when we were going into a global financial crisis, that forced these market changes to occur.
Thank you, Nick. And Layla, your thoughts on that one as well, please.
Yeah, I mean, I think unfortunately people were caught sleeping on this one. We did have to wait, I think, for some quite clear innovations to take place in the space. So, for example, Nick mentioned earlier cloud-based. So having the ability to be on AWS, for example, means that you can reach that true scale and that true ubiquity. But that is really for the players that chose to capitalize on it, those of whom are around this table, for example, this virtual table. Again, the inertia was just too much, and it was too comfortable to remain in the position that they were in before.
Thank you very much, Layla. Nick, should we come back to you with that one, next one?
Yeah, just to, I think, emphasise that. I remember in 2014 having a meeting at the Bank of England talking about what we're doing with ClearBank. And one of the chaps from the PRA said to me, he said, Mr. Ogden, he said, where are you going to build this bank? I said, we're going to build it in the cloud. And everybody in the room looked out the window because they didn't understand cloud computing, didn't know what we were going to. And if you think that's sort of 6 or 7 years ago and where we are now with cloud computing, that is the rate of change that the incumbent banks are now having to try and catch up with.
That's great. I love that. So, brilliant. That's a great answer. So if you've got a question for our panelists, so much knowledge on offer here. Do get your questions in. We'll try and put that in front of them as well. So the next question we've got here is, how will the emergence of growth of BaaS impact consumers? Ahsan, let's come to you first on that one, please.
It's a very important topic, that how would it impact consumer. But I think first we need to understand consumer. And it's time we stop talking about millennials and we start talking about the upcoming generation Z and alphas. And there were certain traits. They do not have any brand loyalty. They are tech savvy. They are digitally native. And they want instant gratification. Now, this is a generation that doesn't want to go to the bank. They don't want to interact with the bank, and they demand and they expect banking to be embedded and integrated part of their overall lifestyle. So I think in upcoming times we will see consumer doing more banking, but without interacting with the bank. And just to add to that, so that's an opportunity for emerging and developing economies as well, because a huge chunk of their population is young population, like in Pakistan as well. And I think these population can be targeted and can be a good consumer of services based on BaaS platform.
Thank you, Ahsan. That question to you as well, Jason. Your thoughts on that one?
Yeah, absolutely. Whenever generations are brought up, I feel duty bound to point out that I am a millennial. So millennials aren't, millennial often get a word meaning young people, and unfortunately, time moves on, and us millennials are nearly middle-aged now. The idea that the older consumer won't know how to use technology or what have you is rapidly becoming untrue. And the pandemic has definitely accelerated that. People, now are more and more tech savvy. They know how technology operates, and while some of them are, would rather go to the bank, get cash out, and then go elsewhere, others, many, many more wouldn't. They don't, as Ahsan said, they would rather have the financial aspect embedded right in the transaction. And I think we've done this already, at least in the UK we have, and in other countries as well. We've done this already with normal consumer spending every day, going to the shops and buying things by putting card machines everywhere, so you don't have to go and get cash out. And internet enabled services like taxi services like Uber and so on will have embedded their finance directly into their service as well. And I think we're going to see this becoming more and more of a thing for bigger and bigger financial transactions. So things like getting a loan or finance for a car, a mortgage, for example. These things are going to become more and more that you don't have to negotiate with the bank and with the seller of the service or product. You don't have to project manage essentially these two things as a consumer to try and get them to agree to give you the product for a particular price. I think that's the problem a lot of consumers have. It's certainly the thing that I hate about house buying, is having to project manage 5 different things. I don't want to do that. I want to have that done for me by the person who's selling me the house. I want them to project manage all the finance and the so on, and consult me when decisions need to be made, but don't make me run back and forth between things. And embedded finance is part of the solution to that, right? It's part of the moving the finance into the process of buying and selling this object. So I think the future for consumers with BaaS is much more rosy, because interconnected, much more about you don't have to go elsewhere you don't have to go between 5 different players to try and negotiate things. You can have it all in one place, including the finance.
Thank you very much for that, Jason. I will just say that Snap, I am a millennial as well. And if you don't believe that, then it's been a very hard week running Banking Innovation Summit, and the screen lies. Okay, so 2 more questions we got in the chat that I want to bring in if I can. So first one, if we bring this to you, Layla, if we can start with, from Dan, are the legacy core providers like Temenos and Finastra keeping up with newbies such as Mambu and Thought Machine? Your thoughts on that?
I would say to a degree. I think actually they're being looked at as a little bit more of a should we say, the older school players. The Mambus, the Thought Machines, the 10Xs, I think they're doing some really exciting stuff in the space. And when I was talking earlier about the tech stack, they're delivering these thin slivers, which normally the Temenoses and the Fiservs and what have you would be offering. I think they're doing it in a much more, let's say, modular, speedy, agile, tech-enabled way. The Temenoses, etc., they're the Goliaths, if you like. And I would say the Mambus and Alda, the Davids.
Great, thank you. Great answer, Layla. And a question I'll put to you, Nick, if I can, from an Angel again, which is, what do you think is on the way for large retailers to widely embrace open banking for payments? You got any thoughts on that one, Nick?
Well, that's quite interesting, because Walmart have just announced in the States, haven't they, that they're going to have another go at cracking banking because of their ongoing hatred relationship, is probably the best way of describing it, with the card schemes, Visa and MasterCard over there. They have 160 million people go to their shops every week in the States. And so they can create their own, that's half of the population of North America. So they can create their own payments infrastructure, their own payments marketplace, their own payment scheme, and become their own bank. So I think, that's going to be a very, very interesting model. They've tried to do it before. it didn't fail, but it didn't deliver the results they want, and they just announced they're having another go. And so, see where that one goes to.
Great insight there, Nick. Thank you so much. Hope that answered your questions, Dan from Layla and Angel from Nick there. Question here we got on our agenda, down to the last few minutes of the conversation. So, what will the financial sector look like as more brands embed financial products and services? Ahsan, let's come to you first on that one, please.
Yeah, let me answer that quickly. I think the direction that we are heading is financial services will be taking backseat. So for them, it would mean that they have to rethink, rewrite, and redesign their products with that embedded experience in their mind. And the big question for them to ask themselves is that do they support BaaS natively or not? And one last thing is that with that, they will have additional responsibility of addressing challenges like compliances and cybersecurity. But they definitely have to start thinking about BaaS.
Great, thank you, Ahsan. Jason, your thoughts on that one, please?
I think that I agree that financial services will become less prominent, possibly to the consumer. I don't think that that's a bad thing. I think that the idea of someone going to a bank branch and getting money out will disappear, and there will be fewer and fewer bank branches as they become less and less used. And as they become fewer and fewer bank branches, there'll be less reason to go to them. And so the spiral will continue, and most financial services will move online or into the physical spaces where consumers are going to buy products and services. But I don't think that means financial services become less important. And I think it actually means that they have to think more about how they're impacting consumers, because they're actually less obviously visible.
Thank you very much, Jason. Layla, let's come to you. Your thoughts.
Just to follow on from both Ahsan and Jason's points there, I think what is absolutely key to understand is that banking as a service should be purely commodity-like, sitting in the background. You want to be able to make sure that you're offering the most efficient product, the most at scale product, and in terms of cost, lowest cost product as well, to enable all of these use cases that allow you to sit on top via API. So I think fundamentally, to Jason's point, the financial services themselves, they won't diminish. They will have to be there, and they have to work as hard, if not harder than they ever have, entirely tech-based, cloud native. But it won't be something that it diminishes. It's more in the background. It's more commodity-like.
Thank you very much, Layla. Nick, your thoughts on that one as well, please.
I think it's less about brands and more about customer service. I think one thing that we've all learned from the pandemic is that customer service, we moved into an online world, we got shopping delivered and all the rest of it, has really been exposed in a way that probably we've never really seen before. And as financial services move forward, it'll be those organizations that really provide a super slick customer service. And I think that it's going to be the new incumbents that can do that. And there will be the new incumbents that do that because they understand that they're holding their customers' money, as opposed to some of the incumbent banks who think they are holding their money. And I think that's a mind shift that's going to have to change. And it's that mind shift which will dictate the customer service attributes which consumers will then use. And from that, they'll then pick the brand.
Great, thank you very much for that, Nick. And I've just looked at the time, and that's all we've got time for now, I'm afraid. So I'd like to place on record my amazing thanks to all our panelists, to Ahsan, to Jason, to Layla and Nick. That was a great discussion. We went through all your questions in the chat. It was really some great insight. So thank you so much to you guys for giving your time. Thank you so much for that. Thank you to you, our audience, for tuning in. Some great questions. Thank you so much. Our next session starts at 3 o'clock BST. It's on sustainable finance, what it is and why it's important. We hope you can join us then. Thank you so much for tuning in to Banking Innovation Summit.